uproar of central banks. The week ahead will be the central banks meeting. Central banks in UK, US, China, Swiss, Japan, Brazil, Turkey, and some other developing economies will have monetary policy meetings. Inflation is still high in most developed countries, and in some other countries like China and Japan also started to grow. At the same time, we have more signs of slower economic growth in 2023, especially in the private sector's outlooks. Let's review the most important events and the data in the week ahead with me, Ahura and FC Markets. Number 1, US housing data. Housing starts and new home sales data on Tuesday and Wednesday will be out. Both indexes have been easing in recent months, and now, while the mortgage rate increased above 6.2%, and both mortgage applications for purchases and pending home sales dipped in July, we can expect weaker numbers in August as well. At the same time, Federal permits over the past 5 months point to another move lower in the total housing starts in August. Ahead of Wednesday's Federal Reserve meeting, market participants can ignore these data and wait for Wednesday's FOMC announcement. Number 2, FOMC rate decision. Last week's inflation numbers increased the expectations for 75 basis point rate hike and USD demand. At the same time, U.S. economic data, especially labor market data, represent acceptable economic conditions, at least in the current situation. Along with interest rates decision and monetary policies, Fed will update its economic projections and further rates and inflation estimates. For 2022, the federal fund rate is expected to be 3.875%, up from 3.375%, which is predicted to be 4.125% by the next year. We can also wait for weaker GDP and employment data estimates in this week's FOMC economic outlook. It's impossible to comment on the market reactions before Powell's press conference and hearing his answer to reporters. Number 3, Bank of Japan. While yen is significantly underperforming and many are waiting for the central bank's intervention, I must mention that weaker currency can play a positive role in increasing Japanese export and also can cause higher inflation, which is one of the main goals of Japanese officials. It seems that for now, policymakers will prioritize the economic growth and inflation dynamics as opposed to a more stable currency. Therefore, we expect no change in BOJ's policies and interest rates, which can lead the yen to the weaker levels, probably around 150. Number 4, Bank of England. While last week's published inflation numbers were somehow softer than expectations, they were just in the headline numbers and core inflation accelerated. Also, as we already saw in the US, inflation started to increase again after 1 or 2 months of softening, so we cannot count on solving the inflation problems with one report. Therefore, we are still waiting for at least a 50 basis point rate hike by BOE's MPC. I say at least because with hawkish decisions in Europe, US, and some other economies, surprise also can happen. Bigger than 50 basis point expected rate hike could help the sterling against its crosses. Otherwise, bears can continue the trend. Number 5, other central banks. While most eyes will be on Fed meeting and then central banks meetings in the UK and Japan, we have other investors and traders who will also be worried about other economies. Thursday will be a crazy day, as in line with BOJ and BOE, we also have Turkish and Swiss central banks meetings. Estimates are for no change in policies in Turkey and a 25 basis point rate hike by Swiss National Bank. On Friday, the Brazilian central bank will meet, and we expect policymakers in Brazil to stay on hold after last month's 50 basis point rate hike. And finally, number 6, Eurozone PMIs. The energy crisis led the European economy into a crisis and is expected to have more signals that the Eurozone economy is likely to fall with weaker estimated PMI numbers in the service and manufacturing sectors. While inflation in the Eurozone is still increasing and we are waiting for more hawkish stance from ECB These data are supposed to increase the pressures on the European currency and stock markets. Thanks for watching this video and hope it's going to be an amazing week for all of you guys.